Hello and welcome to the Walk Around podcast powered by JM&A Group. If you are in the automotive business, you have found the podcast for you. I am one of your hosts, Mark Spoto, joined as always. Wait, Elliot looks a little bit different. This is actually our producer, Caitlin Swanson. Say hello, Caitlin.
Hello, hello.
She is filling in for Elliot today in our intro. But Caitlin, I think you would agree with our guest today. Jonathan Smoke is the authority on automotive trends and topics.
Definitely. Great conversation. A lot of fun we had with this one.
A lot of fun we had with Jonathan. If you don't know Jonathan, follow him at Smoke on Cars on Twitter, or honestly, just Google his name. And he is mentioned in a variety of different articles and websites about the automotive industry. He's the chief economist for Cox Automotive. He's been there since 2017. And Caitlin's right. We had a great time. We learned a lot. And we may have learned a bit about Elliot's music tastes.
Definitely.
Along the way. So stay tuned. Let's take a walk around with Jonathan Smoke. Jonathan, thank you so much for joining us on the Walk Around podcast. It is a pleasure for you to have for us to have you here. When I saw that you were going to come on the podcast, I was reminded of the old E.F. Hutton slogan. Do you remember? I'm dating myself, obviously. When E.F. Hutton talks, people listen.
Yes.
And when Jonathan talks or tweets, people are listening.
Yeah, I mean, I think, Jonathan, you're as close to the authority on the automotive industry as I think we have.
Absolutely.
In the business. So it's a true honor to have you on the podcast. So thank you, Jonathan.
I appreciate that, and especially coming from you guys. So it's a treat to be on with you.
So let's jump right into it, Jonathan. You are so focused on economic and automotive trends. That's exactly the kind of thing we try to provide our audience.
Yeah, it was kind of like we do some prep work for this and kind of our minds were blown. It's like, well, where do we go? But
yeah, there's so many directions we can take. You know, you hear so much about it's such an interesting time in the automotive business.
For sure.
It's so unpredictable.
Yes.
What
must be a fun time to be a forecaster.
That's right. So like, what are you looking at right now, Jonathan? Like what's got your attention out of all the things going on? And we'll get into some of those, but what's got your attention right now?
Well, unfortunately, what's got my attention is the U.S. government and our own self-imposed debt ceiling drama.
Yes.
So those kinds of wild cards we can't seem to rid ourselves of. Outside of that, I basically spend my life trying to make sense out of what is happening. And more importantly, than being able to project where do we go from here, which is what businesses really need to know, consumers need to know, everybody needs to have some way to navigate that world. And it is truly a difficult time to be a forecaster, no question about it.
Yeah, it's funny. I won't call out who they are, but I've been joking about this, how at NADA, the consensus was used car prices are going down. They're going to go down this year. And then 3 months, 4 months later, 5 months later, it's, no, they're going up. They're going up. So let's start there. What is going on in the used car market? It is perplexing, to say the least.
Well, most importantly, we are very supply constrained across the board, both new and used. When you shut down every factory in the world and had difficulty getting those factories back up to speed, we basically went from a world where we were net adding 4 to 5 million new vehicles to the car park every year to basically adding nothing and actually losing vehicles in the car park for the first 2 years of the pandemic. And now we're up maybe 1 million from where we were 3.5 years ago. And meanwhile, we've grown population, we've grown jobs, we've grown licensed drivers. We've actually caused consumers to be even more car dependent than we were prior to the pandemic because of where people have chosen to move to and live. It basically means you've got the classic. We've had more demand and less supply, and as a result, prices go up. And we knew that would come at some point this calendar year. We just thought it would be in the second half of the year. And the trends that we were seeing last year were likely to continue. But basically, if you look what dealers did last year when used vehicle values started to decline, they became very focused and disciplined on adjusting their level of inventory to line up with the actual sales pace. So I would say best-in-class dealers have been turning used inventory at about a 30-day pace for 9 months plus. And as a result, we ended last year and started this year with the lowest retail inventory in at least a decade. So it didn't take much momentum on the part of consumers. And guess what? One of the assumptions we made that would cause used vehicle demand to not collapse much more is the fact that, look, vehicles are a depreciating asset. So if you actually have vehicles returning to depreciating, you create opportunities for consumers who were largely priced out of the market last year. Yes, we did go through 12 straight weeks of wholesale prices going up to start this year. But by the way, that's old news too, because that changed in the second half of March. And we're now solidly back to seeing vehicles deliver depreciation, which means that demand will only improve, I think, as the year goes on.
That's great. So, when you think about all the stats out there, and let's put aside the debt ceiling, because I've read a lot of articles on this, and whether it's a Republican or Democratic in power, 78 times, I believe the number is, the debt ceiling has been raised, with both parties being a part of that. So in my mind, it's going to happen again. It's just a matter of when, how long they want to drag this out. I don't think either party has a good negotiating record on that, but based on history of both parties raising it 78 times. So putting that aside for a second, what is keeping you up at night? What is that one thing that, man, I just wish we could get a better handle on this in our business right now?
Well, coming into this year, it wasn't so much getting a handle on it. It was praying for the consumer continuing to hang in there. And we've seen the consumer be remarkably resilient, and there's no sign in spending data. And I get data with only about a 3-week lag on credit card spending, and we've yet to see really the consumer pull back. They have changed what we're spending on, but we definitely are not seeing the kind of pullback that would lead to a recession. And ultimately, that's because the labor market is incredibly strong. We've got the lowest unemployment rate since the Korean War, and it was only lower during a stretch of the Korean War because we had millions drafted into service. So outside of active wartime, we've basically got the strongest labor market we've ever had. And despite what the Fed has been trying to do, they have not been able to kind of break that. So the consumer has had to deal with some pressures. There's no question inflation has been our number one issue, but we're seeing inflation come down. So as this year has progressed, outside of those wild card kind of things like our government doing something stupid, it's basically one where you can see light at the end of the tunnel. And from a, are we going to have a recession or not perspective, I've maintained a glass half full view that, look, we have to consider that it's possible, but the metrics just month to month, week to week, we have not had a decidedly negative week. So I don't feel like we're missing any sort of data points on that. I do quite often go through questions on whether or not the numbers I just saw from the government make any sense. And we're seeing a lot of revisions in some of those numbers, which is why I have so much more faith. One of the reasons that I came to Cox in the first place was because if you want the truth, this is quite a place for facts and insights about the market. And I feel very strongly about our role, my role specifically with our economics team, to put data out there to help the industry understand what's going on. I feel like for even before the pandemic, we were constantly sort of shedding light on crazy, doomsday beliefs.
Sure.
I mean, when I started in this job in 2017, we had Wall Street convinced we were going to have an awfully tsunami that was going to crush the auto market and create the next great recession. And last time I checked, that didn't happen.
Mhm.
Well, that's right. We're almost 2024 here. And I know this is not maybe economic, but in terms of, prognostications, I thought we were all going to be in autonomous vehicles by
Right.
now. And magically, it just hasn't happened. I don't know how that could have happened.
Amazing. A pandemic will do that.
I think so.
Um,
or maybe a reality check.
First of all, I like to hear an economist have a glass half full perspective. So
I do like
that's
that.
reassuring.
Yeah.
But Jonathan, I'm curious, you said you noticed a change in consumer spending. What is that change that you're noticing?
Well, compared especially to last year and prior to that, 2021, when we were stuck at home and we weren't able to go travel and eat out and go to concerts and do things like that, we spent a disproportionate amount of money on goods. And that happened to line up as well with a lot of home buying and people moving from dense urban areas to less dense population areas as people could work from home. You also had a surge. I mean, we had our best retail vehicle market ever in 2021 when you had both new and used retail sales, and we would have sold more had we had more supply. So it was inevitable that spending on goods could not maintain that pace. There are only so many things you can buy for the house and cars
Right.
that you can have in your driveway. You eventually are going to see that slow. And we've seen that slow.
Yeah, I know Mark still has a lot of toilet paper left over from
That's
the
right.
pandemic. Yeah.
That's piles,
Yeah,
piles and piles.
Tons. Yeah.
And then you just pivot
Sorry,
into
go ahead.
spending on services. So when I look at the spending data year over year, it's travel categories, it's eating out, it's services, it's stuff that we weren't really doing as much of a year ago.
Hospitality. I gotta imagine hospitality has grown in that same vein.
Oh yes, absolutely.
Hospitality spending.
But actually,
So,
within
John-
travel, hotel is the one category that was up much more strongly a year ago, and in some weeks is now treading water or even down slightly year over year. But I think a lot of that had to do with capacity. Prices went really high on hotel rooms
Yes.
last year, and now that labor is coming back a bit more, I think hotels have a bit more capacity, and as a result, the pricing's not as strong there. But it's not quite the case on every other category. Airline fares, car rentals, cruises, everything else related to travel is up strongly.
So Jonathan, you mentioned being in this role and kind of seeking the truth and being able to share knowledge and helping people to see what's going on. I gotta assume at this point, one of the most frequent questions you get is, when are things going to go back to normal? And, when are we going to see kind of prices come down and kind of the industry start to return to what we all knew a few years ago? Is that the case? Do you get that question? And what would you say to that?
Oh, all the time. And a standard response is, well, define normal. And
Right.
what time frame and what aspect are you thinking of as normal? Because I would argue we already see evidence of many things returning towards more normal trends. For example, used vehicle price movement this year is pretty darn close to a normal depreciation trend. We plot like what happens with the Manheim Market Report prices, for example, across all years, and compare that to what the years before the pandemic, 2014 to 2019, specifically, because those were fairly quote unquote normal years. And this year's curve was a little bit stronger in the first 10 weeks of the year. But since then, it is hugging that line. It is as close to a normal year in terms of vehicle depreciation, especially in vehicles that are 4 years of age and older. But if the question is ultimately somebody saying, when are we going to see car prices go back to what they were in 2019? That's a simple answer. The answer is never. that we've had a step change in values. We fundamentally are undersupplied, and there's plenty of people that'll step in and buy vehicles if we see even a modest kind of correction in prices. And we have no risk of an oversupply situation really weighing down on that. And I would say, the housing market is a really good metaphor or kind of symbol for what we should expect in the auto market, because the housing market effectively saw the same trends happen a decade ago. They went from being oversupplied to having a decade of underproduction that has left the housing market woefully undersupplied. And as a result, the risk of substantial price declines across the country is low, even in an environment where interest rates have risen as much as they've had and slowed down sales.
So, Jonathan, speaking of the housing market, I don't know that many people know this, but Jonathan was the first economist for Realtor.com.
No way.
Yes. That's true, right, Jonathan? I'm not just making that up.
No, you're absolutely right. I spent over 20 years in housing before coming to auto.
Wow.
So what made you make the jump from housing to automotive?
Well, a couple of things. One, I'm known for liking to integrate music into my economic presentations, and there's way more.
We're going to get to that.
Yeah, we're well aware of that.
We are going to get to that one.
We have something coming on that in a little bit. So
there's
just
way
stay
more.
tuned.
There's way more good songs about cars than about houses.
Definitely. There's also a lot of songs that have smoke in the in the title or in the
lyrics.
Yes,
there's connotations to smoking.
And we may have thought of going there, and we may have thought wiser about it.
Yes,
when we saw the topics,
especially
of a lot of those songs.
More current songs with smoke in it tend to not be playable on public airways.
No, the ones from the 90s are not playable either in any way, shape, or form. Yes, I'm thinking Snoop Dogg, but anyway, go on.
I would say the rest of the equation was influenced by, I had spent over 20 years working in all corners really of housing and real estate. I've done home building, did a little bit of commercial real estate, worked with the realtors. And I thoroughly loved what I was doing, but I was eager for something that could be a bit more challenging. And automotive has some parallel similarities to what the housing market is like, but it's infinitely more complex and had a lot of things about it that I wanted to learn more about. And then the opportunity at Cox. I mean, Cox, you guys are blessed to work for a privately owned family company that is very similar to the family that owns Cox Automotive. And I've worked at every kind of company, from my own to publicly traded companies to private equity owned, you name it. And this kind of company with this amount of data and opportunity to really help the industry was precisely what kind of motivated me. And all of my real estate friends were like, "Are you crazy? You have a brand and a reputation. You don't need, to do much significant the rest of your life. You can just coast on that." And I'm like, that is so not me. So off I went.
Well, we were very curious when we looked at your background, and honestly, and you may think, well, this is shallow, but we were curious. So who throws the better conference? Is it the realtors or is it the car people? I mean, yeah.
That's a good question.
Yeah.
I
probably close.
I can say that the realtors know how to party. There is no question.
Well, I can assure you the car business knows how to party too.
Yes,
I think so. But go. Sorry. Go ahead.
The car business does know how to party, but maybe it's also time frames, and I haven't quite yet had the similar sort of crazy go-go years where we aren't dealing with a pandemic to see the same effect. But
well, that's a great point.
Well, that's a good point. But I just heard that as a challenge. So all of our dealer friends listening, Jonathan will be at NEDA 2024. we
That's
better
right.
show him a good time, because next year at this time, I want to hear that the car team is the better partiers than the realtors. That's for sure.
But
So,
actually,
Jonathan,
that's a fantastic question. It brings up actually something that I think it's really important for people to understand. There are a lot of similarities between the auto business and the housing business. A housing transaction leads to vehicle transactions. It's true on the construction side. It's true on consumers tend to buy a new vehicle within 6 to 12 months of moving to a new location. But it's also true about the fundamental nature of the business. It is locally driven. It is people that are entrepreneurs and care about the industry and care about each other. There's a lot of family, that's involved. There's a lot of really cool similarities, and I'm one of the few people that has enjoyed being, a big part of both.
Yeah, it's good that you mentioned that, because we've often discussed about the customer experience, and we've heard a lot of people liken the car buyer experience. It should be more Apple-like. It should be more consumer goods like. And I've heard people argue that specifically when it comes to price negotiation and one price, and I've heard people argue that really, when you think about the car business, to your point, it's much more like the real estate business from a pricing perspective. The reality is, would anyone buy now, admittedly, there are some markets where you pay over the asking price of a home, but generally speaking, there is no such thing as one price on a home. It is a negotiated thing, and it's still a negotiated thing, much like the car business is.
Yes.
And I see that as a very similar, to your point. It leads to it leads to a longer transaction. It leads to a more complicated transaction. It could lead to frustration and emotion in the transaction.
Absolutely. The two most expensive transactions a consumer ever makes, heavily dependent upon credit, and it's very complicated, and there's no question. Both are extremely emotional.
Yep.
The other similarity is it's a heavily relationship driven.
Oh, definitely.
I mean, as a realtor, as in construction, car business, car dealer, the local community, as you mentioned, Jonathan, relationships drive those experiences.
Definitely. Yeah. In all ways.
So, Jonathan, we prepared a little bit of a rapid fire segment for you.
Oh boy.
Yeah, I know you're going to love this. So we're going to throw out a topic, and you're going to tell us, is it going up? Is it going down? Or is it going to be neutral?
And the time frame.
Yeah, let's talk.
Yeah, because this could be,
year,
you as an economist, I'm sure you're going to say, well, what
prognosticator, right? As a prognosticator, think about this in terms of the year ahead. Maybe if we were to get back on the pod a year from now, what would this look like?
Yeah. And by the way, before we do this, kudos to you. You put out predictions every year. And we actually thought about going back to some of those predictions from a few years ago and revisiting them, but we did not want to do that.
We didn't want to do that to you.
We figured this would be a better use of our time.
I'm sure your bosses do that to you on a regular basis.
Oh, yes. And actually, our marketing team insisted last year on me giving myself a grade every quarter on just how good those predictions were in January.
We give you an A always.
All right, so here we go. Up, down, or neutral? First one, inventory constraints.
Constraints down. Inventory
down. Up. That's good.
Mm-hmm.
New car prices.
That one's a little bit more complex. I think actual transaction price down, MSRP up, and invoice up.
Interesting. That means
up.
Discount.
That'll come.
Or
that's coming
incentive.
up. That's coming up.
Okay.
That's coming up. Used car prices.
Down in a normal way, reflecting depreciation.
He's always got a caveat. He's got a caveat.
Right.
I love it.
Yep.
Incentives.
Up.
Up. We like to hear that. Dealer profitability.
Down, but still at higher
Still
levels
strong.
than before the pandemic. Yes.
Yep.
Historically high, but down relative. Okay.
No trees grow to the sky.
That's
My dad used to
it's a
say
good
that.
one.
Yeah.
It's a good one. Vehicle affordability.
Challenging. Down, generally down, but probably not getting much worse. Because we assume interest rates are going to or are close to their peak.
Here's a good one. I mean, we are seeing news on this topic almost every day in terms of players changing. Auto loan rates.
Down. I think we're close to the peak.
Excellent.
Leasing percentage?
Up. Because it
Great.
was it was below the floor last year, and it is slowly coming off the floor.
Yep.
So do you think some of these lenders we're going to see a cooling off period of lenders getting out of the auto lending space?
It's a question that I'm getting a lot these days because of the uncertainty with the banking crisis that started in March with Silicon Valley Bank, and now four other banks have been taken over. But where we see stress and isn't remotely connected to auto lending and the banks and the types of lenders that are there. It's a wonderfully robust market with all types of players, with all types of strategies and approaches. And I think auto credit is going to continue to be pretty resilient. And I don't expect to see much change. Where we're seeing some folks exit the business has to do more with like dealer floor planning. But even so, it's been really a drop in the bucket. And if one player exits, someone else is going to step into that space.
That's good news for the dealers.
Great news.
Okay, let's keep it going. So Elliot mentioned leasing. How about all cash deals? Up, down, neutral?
I think we still got a little bit more to go up. A year from now, we'll probably be a little past the peak and maybe starting to see that come down.
Okay. EV sales share.
Up.
Up, up, up.
Of course.
That was a layup. We were just seeing if you were paying attention.
All right, here's a good one. A little bit controversial. Everyone has an opinion on this one. And this might be a little bit, you're definitely going to have a caveat on this one. Digital retailing.
Up, but I think digital retailing is more about portions of the transaction becoming more digital as opposed to the entire transaction being done digitally, because most buyers don't want that. Back to the earlier discussion we were having. Yeah,
right,
no doubt.
Right,
very reasonable answer.
That's why he's DJ.
That's why he is.
That's why who he is. Okay, last one. Fixed ops revenue.
Up. No question.
Up.
Forever.
I would say like the overall sentiment is very positive.
Yes.
For the dealer, when you look at these topics.
It sounds like we are in the midst of a storm. But there's maybe a little break in the clouds.
That's a great analogy. All right.
Storms are good for the people who are prepared. The wise man whose house who's built on stone, ends up with.
Jonathan, that is a great point, because there are dealers who have weathered this storm really well because they're progressive and they identify those things.
Definitely.
Let's take vehicle affordability as an example. What are you seeing dealers do who are savvy and dealing with those affordability issues with their customers?
Well, one, they have long-term relationships with customers because, as I mentioned, look, people were priced out of the market this year, but that creates opportunities when vehicles reach certain prices because of depreciation, for example, in the market, or as incentives are starting to come back. There's no question there has been a bigger shift to the used car market. And so a lot of what franchise dealers have been in the in the best spot in the market, because where there has been pressure on affordability and new, most of that can be met by moving that customer to a used vehicle. And in some cases, there's been a shift with manufacturers to embrace certified pre-owned as their entry level pricing, because they've abandoned sedans and other affordable price points. So I think dependence and focus on used is really key. And I think aspects of digital retailing play into that, because credit is one of the most important upfront questions that the consumer wants to know. They need to know what the monthly payment could be at the beginning to even know if it's worth kind of entertaining a purchase or interacting with a dealer. And so I think the movement towards digital retailing has been especially beneficial on the credit side, and for consumers to really get to that idea of, can I buy something in this market?
Yep.
It's great insight.
Great insight. All right.
All right. I think we're ready.
We are.
We went from a rapid fire segment to now one of the most appreciated segments in the podcast nation.
So we were testing that segment out, the rapid fire. We were going to call it a Spodify. Yes.
Yeah.
In honor of Mark Spoda's last name.
Well,
So you've just been Spodify.
let's take that back to the lab and think about it some more. But let's go into Schor Thing, Jonathan. Elliot's going to give you some hot takes, and you're going to help us hold Elliot accountable.
Yes.
On his.
And some of this we touched on, and I think we have some more fun here than probably some business. But let's start with inventory challenges. And I think for a lot of the reasons you just said, the inventory challenges on the new and used side are not going away anytime soon. So I believe inventory will not be back to the new normal, or whatever the new normal settles into be, through the year 2025. Sure thing or not a sure thing?
I would say it's a sure thing.
All right.
25 is where you
Look at you.
make me hesitate a little bit, because I have no doubt that through next year we will still be tighter than normal by every way of looking at it. I think as you get beyond 25, it starts to normalize.
Jonathan, I know this is not a short answer, but we are now 3 years past the pandemic, almost 4 years. Why are we still talking about inventory challenges?
Multiple reasons. One, we have a war going on in Ukraine that complicated and disrupted a lot of things, and still has an impact on like energy markets that change what is possible in Europe. We've had continued sort of missteps with the way China managed COVID that impacted a lot of Asian supply chains and production. And so a lot of our lingering issues with semiconductors, and the reason why, for example, most Japanese manufacturers are still furthest behind on being close to some normal level of production or deliveries, is a variable. And what's the number one problem for businesses in the U.S.? Labor. And we can't be at 100% production capacity as long as we have a 3.4% unemployment rate. And at the same time, what we have coming up later this year is UAW contracts too. So there's just a series of variables that sort of mean we can't possibly be 100% normal. And oh, by the way, we're transitioning to electrification, and that is causing change that adds friction, that adds inefficiencies to the system, that likely also complicates us getting to a new normal very rapidly.
Yeah.
Going back to that perfect storm analogy.
Well said.
I mean, it's just so many topics and trends that it's hard to keep up
It
with.
really is. It's dizzying.
Okay.
In fact,
So you're 1 for 1.
yeah, I know. Mark doesn't like that, by the way. So,
It's amazing.
now we're gonna have a little fun with your name. We were thinking about if you were not in this profession, right? What would be some great
If you were
names?
not an economist.
An economist, right?
'Cause
What would be some great names? And DJ Smoke is great, and we thought of a fire chief would be a fun one. WWE wrestling name. It sounds like a good one.
John Smoke.
Yeah.
Coming down the ring.
Uh-huh. And, but we believe that the number one profession that someone with your name should have is a politician, because they are full of smoke. Sure thing or not a sure thing?
Sure thing. And I'll go even better for you. I still envision running for president one year just to be able to do this and have my vice president be someone with the last name Weed, which I know there's one that works right down the hall for me that we could be.
Oh, wow.
We could absolutely be Smoke Weed, and we would at least carry Colorado, maybe a few other states.
Maybe a few other
I
states.
think you carry quite a few.
Yes.
So yeah, I am speechless on that one for a second. No,
for two.
that's great. We got to make that happen somehow. I think you'd have a lot of votes.
Maybe you start locally, Jonathan. Maybe you just start with like a city council or work your way up to president.
Right. I think that's how usually it works.
Of course.
All right.
Start somewhere.
All right. Last question. And Jonathan, so we know you do like to pair music titles with presentations and economic statistics. So we did our own little research on, if we were to put the music titles to the state of the auto industry, we've came up with a few for you to maybe choose from, or if you have one on that you have off the top of your head, by all means. But some of the ones we thought of was, little Tom Petty, the waiting is the hardest part for your inventory.
He's nodding his head. That means he likes it.
We also thought of,
you don't realize what validation this is. This is DJ Smoke.
That's true.
Who puts out his lists routinely, and you got a head nod.
I got a head nod. Well, we got some more to go.
All right, we got more to go. All right.
Yeah.
The waiting is the hardest part.
Right. That's right. But we thought of It's the Final Countdown by Europe for EVs, right?
He likes it. He likes that.
I like it. I'm seeing a playlist coming.
Yeah. We put in a little Redman Method Man in terms of how high do used car prices go.
Wait a second. What a campaign song.
Oh my gosh.
Smoke weed.
Yes. Oh boy.
That's amazing.
Amazing. And then we did talk about fast car, because a lot of the cars coming out are super fast. Tracy Chapman classic right now.
Yeah.
I believe that Mark's favorite and would be a sure thing would be a Run DMC classic. It's tricky. But
absolutely, if you would ask me my song today for forecasting and all the questions you've given me today, it would be It's Tricky.
I'm done.
Well,
I'm done.
But that wasn't the sure.
Oh, that wasn't the sure thing.
Yes.
Right. What is your sure thing?
The sure thing has to be Crazy Train by Ozzy Osbourne, because we are on a crazy train.
He loves it
in the auto business. So sure thing or not a sure thing?
Sure thing. A+. I'm putting out this playlist.
3 for 3.
Love it. So
Jonathan,
we will
would
put
be
this
honored
on Spotify for you guys, so you can follow us on Spotify.
Yes.
And we'll put this playlist out for you.
Jonathan, if we could put out a shared playlist with your brand, amazing. That would be crowning achievement of the Walk Around podcast.
I think so.
Yeah, and maybe we can get some other contributions from your listeners to really crowdsource the ultimate auto playlist.
Oh, I love it. I love it.
Well, we would love to have you back, Jonathan, to continue the conversation about this crazy business and where things are headed. We can't thank you enough for taking the time and sharing your insights with us. It's been fantastic to learn and to hear what's going on from your perspective.
Well,
thank you so much.
Yes, there's always something for us to talk about, and I guarantee you we can come back and work on this music selection.
Awesome.
Yeah, thank you, Jonathan. Thanks for having a little fun with us too. We appreciate the candor.
Absolutely. Thank you.
Definitely.